Okay, so today we're going to be talking about stocks and bonds because I still get questions that from people who need to understand a little bit more about the basics of stocks and bonds and then where they all fit into the portfolio. And in recent times, a number of people have been losing their jobs. Okay, so NEPA is back. A number of people have been losing their jobs and then finding themselves unable to um, just finding themselves unable to go on, not knowing exactly what to do. This is why I'm going to talk about the four markets today. The reason that people, when they lose their jobs, they are totally flustered and sometimes, just totally defeated and not knowing exactly what to do. There are two reasons that happens. One is they are focused on only one market. There are at least four basic markets that you want to play in as many as possible. The second reason is people don't build emergency funds. So sometime next week, we'll talk about emergency fund. Why emergency fund, building emergency fund is a must. And then those of you in the Financial Fitness Challenge, please make a note as well. If this is something you would like us to talk about, make a note about building emergency fund. So your emergency fund allows you to accumulate about 6 months of your living expenses, like when you're working. Okay, you accumulate 6 months. Some people even do up to 1 year of your living expenses. It's called emergency because if you suddenly lose your job, you still have 6 months of your living expenses conserved that you can live on while you get yourself together, either to get another job or something else. And then, of course, the first reason I mentioned is you're only playing in one market, which is the labor market. And so once that labor market goes, so automatically, you find yourself in the red. So what we're going to be talking about today is very, very important for those who are just beginning their career, for those who are in their mid-career, and for those who are almost retired and then facing retirement. So we are talking about investing for beginners, stocks versus bonds, a beginner's guide to financial security. Okay, so by way of getting to know your investment levels, your investment consciousness, beginner, intermediate, advanced. So there's a quick quiz I want you to take right now. So I have these 14 asset classes. So I would like you to look at these 14 asset classes very, very well. And I would like you to tell me which of these assets that you currently have. So it doesn't matter how much of it you have, but look at all these assets. And then I want you to just type out the numbers of the ones you have. So if you have savings account, that's number 1. So type 1 in the comment section. If you have stocks, that's 2. If you have mutual funds, that's 8. So in the comment section, you will type 1, 2, and 8. Okay, so every one of us do this. For those of you on Facebook, what I can do is, okay, so let me copy those. Let me copy those and put in the comment section for Facebook. So I want you to look at all those 14 asset classes. Incidentally, I'm not able to number it right now on your Facebook comment, but you can type each of those things. So I want every one of you should do this. So I'm going to give us some 2 minutes, everyone to do this, okay? So look at all these asset classes and then type in the comment section and also in the chat for those of us on Zoom, type the assets that you currently own by number, how many of them. So first of all, what I want you to do is in bracket, tell me that you have 5 of them, 1 of them, or 2 of them, then proceed, put a dash, and then say number 8, number 13, number 5. So first of all, say how many of these 14 that you have. Then go ahead and tell me what 14 that you have. Everybody do this. Very important exercise. You will discover, just like you have seen, those of you in the Financial Fitness Challenge group, you already saw the what to expect. You know, we posted what to expect during the Financial Fitness Challenge there. The very first thing to expect is to assess your foundation, your financial foundation, to assess where you are. And this is part of the exercise. Knowing exactly what your financial base is, what your net worth is, what kind of assets you already play with, how many markets you are involved in, and then being able to work your portfolio growth from there. All right, everyone do that. I want to see the responses in on Facebook. I've gotten some on Zoom yet. I'm waiting for your responses. Tell me, out of those 14 assets, how many of them you currently have? All right, so let's take a look at, and then those of you watching the replay on YouTube, I also need you to comment. And by the way, when you go to my YouTube, what I just understood today was that because a number of people are saying that, even the subscribers are saying that they are not seeing the replays that I post every day on YouTube. So I understand that if you watch and then you like it and you share it, that it makes the algorithm to make it a bit more make it a bit more available. So for those of you who haven't subscribed, please do so. And those of you who, when you watch it, please do like it. Do like, do comment, do share it, take some action so that other people can actually see. There are people looking for those videos, and then I'm answering questions every day on things that we've already covered. And we have 520 videos there or more, and then most people don't see them. But I understand that if you like, if you take some action on the video when you watch it, if you like it, if you comment on it, if you share it, it becomes more available. So that's one way that you can show gratitude for what I do. I would definitely appreciate that, please. And if you haven't subscribed, I'm going to give you the subscribe link after. All right, so let's take a look at the assets that we have. Oh, Stephen says, I thought you said you have solar. If you have been following, you will notice that I'm not in the same place. I'm not in the same place I is. You can see that behind me is a different library. This is also where I live. So I'm in a different city right now. So in that city where I have solar, I do have solar. I do have Elon Musk's internet over there. I don't have it here right now. So it's good. You observe that. That means you've been following. Okay, Ngozi says she has 9. 9 is real estate. Very good. Zuka has 1, 2, 3, 4, 5, 8, 9, 12, and 14. Amazing. Zuka, you are doing very well. So during the challenge, you're a part of the challenge. And I can tell why your response is quite bullish, because you are such a determined and very purposeful person in building wealth and then helping out other people. So that's really very good. This is very impressive. So you have savings, you have stocks, you have bonds, you have money market funds, you have fixed deposits, you have mutual funds, you have real estate, you have also of private equity, and you have small business. Fantastic, fantastic, thumbs up. Okay, Victoria has 1 and 5. That is, you have savings account, and then you have fixed deposit. Very good. Esther Colade has 12. That's also impressive. Stephen has 2, okay, which is savings account and stocks. Very good. Tekimbi has 1, 2, 9. 1, 2, and 9. 9 is real estate. Very good. Somtochukwu Kingsley has 1, which is savings account. We are going to change that, okay? Oladayo has 9 and 14. That is real estate and then a small business. Fantastic. I love that. Nama has 4 of them, 1, 7, 8, and 9. So you have savings account, you have treasury bills, you have mutual funds, and then you have real estate. Fantastic. Kizito has 1, 4, and 8. So you have savings account, you have money market funds, and then you have mutual funds. Fantastic. I love that. Emmanuel has 1, 2, 9, and 10. That is savings, stocks, real estate, and commodities. Okay. Innocent has 1, 7, 9, 14. So that is savings account, treasury bills, small business, and real estate. This is good. Ziwa has 1, 9, and 14. So that is savings account, real estate, and small business. Fantastic. Awesome. Okay, so we really have a very good base to start. And so what we're going to do, therefore, this is really good. So I just love the responses in the room, and then the kind of expertise that you have, and then the various asset classes that you have. Okay. Mwachukwu Kingsley says, please share the Zoom link. All right, let me share it again, but it's already there. It's actually there, already shared. Oops, that's a wrong one. So if you scroll the comment section, you will see the Zoom link, but I can understand if you're just coming in, maybe you didn't get it. Yeah, so I will encourage all of you to join the Zoom link if you can, so you can see the things I'm showing on the screen. Okay, very good. So this is how we are going to structure our conversation. So today we are focusing on just those 2 asset classes. As time goes on, we will focus on some of the other asset classes, because I'm sure that some of you may have been hearing about mutual funds for the first time. Some of you may be hearing about exchange traded funds for the first time, or commercial deposits and all that. And this is why, part of why I do what I do, to expand your consciousness on these terminologies. You see, because we are told the spiritual principle is that you shall know the truth, and the truth shall make you free. And the operating word there is not necessarily the truth. The operative word there is know, because it is only the truth that you know that will set you free. I didn't know these things when I was working during the peak of my career in Shell and in Chevron. I didn't know these things, and because of it, it did not benefit me. So if it's not in your consciousness, it does not benefit you. So that's why it's important, for you to show up, make out the time every evening to get to know these things, and then do your own personal reading. There's just so much information out there about these things, and I'm going to show you some links where you can get some education. So you get familiar with all these things. When you hear bond, you hear mutual fund, you hear exchange traded funds, you hear indices, you hear cryptocurrencies, then you don't get lost. You hear land banking or real estate, you don't get lost. You've got to be very familiar. Fall in love with these terminologies, because finance is the language of wealth. Please, somebody type that in the comment section. Finance is the language of wealth. If you want to interact with the Chinese at a very, very close level, what do? You learn Mandarin, you learn the Chinese language. If you want to do business with the French people, the French West Africa, most of us are cut away from commercial activities with our neighbors who speak French. Niger Republic, Cameroon, Chad, Benin Republic, so we can't even interact with these people. Why? Because of language barrier. And then there's some bit of sinister history to that, which many of you may not have realized. Do you notice how they pacificated Africa, during the Berlin Conference? Because you see, if we want to grow wealth as Africans, we have to understand our economic history. Things like why the railways run the way they run in Nigeria, perhaps in Ghana, in different places. They didn't put the railways that way in order to facilitate or to help or to develop the indigene or the country. They did it to facilitate the movement of raw materials all the way. You see, it terminates in Kano. So they move groundnut there. They pick palm oil from the east. They pick cocoa from the west, and everything goes all the way down to Port Harcourt, where they ship these things, to the colonial people. And that's the structure that we still have today. In the same way, when they divided the African countries, they would take a particular region, like Nigeria, more than 350 tribes who can't agree, who will never really agree. No matter how much you preach it, they can't agree. And they knew that, so they forced them together, to become one so-called country. Then they were colonized by the English-speaking British. Now, what did these people do? The surrounding Nigeria, north, west, east, they gave it to France, to the colonists, who spoke French. So, and it was done deliberately, because if we speak one language, you can imagine if all of Africa spoke English. That was the same reason that the Tower of Babel was stopped, because there's nothing like speaking one language. So because of it, we have our neighbors. We can't trade with them. We can't trade with Cameroon. They speak French. Of course, we have some English-speaking Cameroon, part of Cameroon. Then you see our neighbors to our left, to our west, to the west of Nigeria, is French. You can't even communicate with your next door neighbor in Benin Republic. In Togo, the same thing. Then you see Ghana, they do the same thing to Ghana. Ghana speaks English. To the top of Ghana, they speak French. To the east of Ghana, Togo, they speak French. To the west of Ghana, Cote d'Ivoire, they speak French. So everybody, I don't know if you understand what I'm talking about. You have to understand our economic and political history. We're not just talking about making small money. Okay, you're investing in the stock market, and then they make some 60% or 70% and you're happy. We have to think holistically about this subject of our political history, our economic history, and why things are the way they are. So it helps you to make more informed decisions, especially if you're someone interested in economic impact in Africa, like I am, because I've come to the point, which is part of why I do this. I've come to the point because I'm not looking for food. We're not looking for food. I'm not looking for clothes. I'm not looking for fame. I'm not looking for money. But my larger goal, as God keeps me alive, is the economic, political, the spiritual, and then the cultural emancipation of Africa. Cultural emancipation of Africa. Look at what happened, so you really have to understand these things, Now, the missionaries, there were two kinds of missionaries that came to Africa, Christian missionaries, and of course the Islamic, whatever. These are not native religions to Africa. Now, two kinds of Christian missionaries came. There were those who came to serve the colonial governments. And they used the Bible as the tool to enslave the people. Just like one South African patriot said it, nationalist said that, oh, no, I think that was in Walter Rodney's How Europe Underdeveloped Africa. Please, everybody read that book if you follow me. Find that book and read it. How Europe Underdeveloped Africa. If you've read it, just say yes. Just say yes in the comment section so that you can confirm what I'm talking about. So they say that this class of missionaries, in quotes, they came with the Bible in their hand. They told us to close our eyes to pray. We closed our eyes to pray. At the end of it, what happened? We had the Bible, and then they had our land. Very, very metaphoric, but that's actually happened. But there were another set of missionaries who actually came because they represented the kingdom of God. Who actually came? They came for God. They came from God. They didn't come from the colonial government. Those who came from the colonial governments did lots of harm. They were wearing cassock, but they were government agents, and they were using religion to conquer our people. And up to today, our people are still conquered by fake religion, which is so different from the Bible that they are carrying in their hands. So you have to understand how these things happen. Now, why did I go into all this background? So I was talking about consciousness, reading, educating yourself so that you can make better decisions. So now, from stocks and bonds, we're going to understand them as the investment products that we can use to create investment portfolio. So the outline tonight, what we are going to do, I'm going to reiterate, and I'll continue to reiterate the 4 markets. Then I need you to be very familiar with these 4 markets. Then we will talk about investment portfolio and why it is very important that you think in terms of investment portfolio. Then we now zoom in on stocks and bonds. We understand the differences between them, and then the best time and the best way to add it to our portfolio. Then we will now talk about how do you invest in stocks and bonds as a beginner. So you want to have stocks, you want to have bonds in your portfolio. How do you do that? Then after that, we'll round off with our usual aha moments. So as you get your aha moments, get it ready and don't wait till the end of the session. You can actually be typing them as we go on. Okay, so let's get started with the 4 markets. So there's the financial market. There are the financial markets, and the financial markets are where capital and assets are traded. And in my own opinion, the wealth in the planet, 90% of the wealth in the planet are in the financial markets. So when you hear all these big names like Elon Musk, Warren Buffett, Bill Gates, the Louis Vuitton guy, the Walmart family, and all of them, it's the financial markets, the capital markets. So that's where they raise funds. That's where their wealth is stored. So if you like, it's some kind of tokenization of the value which they produce, their capitals, the Teslas of this world, the Microsofts of this world, the Amazons of this world. So that's why where the value that they create is tokenized as capital that are traded in the financial markets. Very important. So I have been screaming it. I've been screaming it like a voice that is crying in the wilderness, that if you are not playing in the financial market, you're limiting yourself to the red ocean of the labor market. Because literally, over 95% of the people play in the labor market. They go to school and come out and look for someone to employ them. And I find it preposterous that people go to the university for 4, 5, 6, 7, 8 years, master's, PhD, 10 years, and then they come out and they have no single portfolio in the financial market. And then they come out and they're waiting in the labor market for someone to employ them and then to start giving them salary. One credit alert every month for the rest of their lives. Then they go through something that they call retirement and then wait until they die. What a waste. So the financial market is important. You need to become familiar with the financial market. So that's where you have the stock market. That's where you have the bonds. That's where you have the private equity. That's where you have cryptocurrencies. That's where you have Forex. So much is going on every day. And the Forex market is worth $4 to $6 trillion on a daily basis being moved around the world between institutional investors and then retailers. So get yourself familiar. And then all of the billionaires that we hear about in the world, all of them play in the financial markets. Okay. So the second market is the labor market. So that is where human work, human skills, and then expertise are traded. That's where, you go to work, someone employs you, or you're a consultant, and then people hire you. The problem with the labor market is that if somebody doesn't hire you, you can't eat, you can't earn. So it's actually dependent on, there's a lot of limitations in the labor market. But then the good thing about the labor market is that it gives you the financial base to enter the financial market. Because as you're earning your salary, you can be taking some part of it and putting in bonds or putting in stocks and putting in the financial market. And then ultimately, your financial market starts outperforming your labor market, and then you automatically have financial freedom. Because what happens in the labor market is that you work for your money. But what happens in the financial market is that your money works for you. And then I can't emphasize enough that your money can work better for itself than you can work for it. Your money can work better for your money than you can work for money. Okay, so if you do it, something you do in 8 hours, your money can work for you. You work 8 hours a day, 5 days a week, but your money works 24 hours a day, 7 days a week, 365 days a year. Your money works. Your money doesn't know public holidays. Your money does not know weekends. Your money does not know holidays. It's always at work. So that is the advantage of transiting from the labor market into the financial market. The third type of market is product market. So product market, that's where finished goods and services are exchanged. Okay, so that's where you have, things like, manufacturing, manufactured goods. That's where you have things like consulting, management consultants, the big ones, and then the small ones. So that's product market. So here it's not human work, but it is finished goods and services that are being exchanged. So the manufacturer makes the cell phone. It's a huge market. So you have cell phone market, which is literally trillions of dollars. That's also where you have, the pharmaceuticals. So you have drugs, different classes of drugs, the analgesics, the antibiotics, and then the antibiotics like trillions of dollars. That's where you also have surgical consumables, the hand gloves, the syringes, and all that. That's the product market. That's where entrepreneurs, play. They create goods, they create products that solve problems for people. So that is where you have entrepreneurs. But you also have the resource market. Resource market, the difference between resource market and product market. They are very similar, but the only difference is that the product market deals with finished goods and services, but the resource markets deal with raw materials. So where you have cocoa, you have your cassava, you have your, all those raw materials that are now pushed to the manufacturers through the value chain to add value to them to become finished goods and services. So these are the 4 types of markets. So let's go into investment portfolio. Every one of us needs to think about building their own investment portfolio. Your investment portfolio is like your ticket to financial freedom. Please type that in the comment section. So everyone on Facebook, type that in the comment section. Your investment portfolio is your ticket to your financial freedom. It is like the substance of things hoped for, the evidence of things not seen. So your investment portfolio represents the freedom that you have visualized. It's in the future, but in a sense, you already have it right now. So investment portfolio is something that if you're leaving this place tonight, you need to go and create. Think about it. So it's a collection of different assets. Like when we started, I asked you how many of those assets you currently have. So your investment portfolio is a collection of different assets that you own that you can now grow, use to grow your money over time. Money needs a portfolio to grow. Money needs a portfolio to grow. Investment portfolio helps you to maintain discipline. For instance, in my stock market portfolio, last year I gave myself a target. And then the other day, so my wife and I were looking at it and it's like, wow, at the time I gave myself a target. And that target was like 3 times that at the end of the year, I wanted to grow this particular portfolio to a certain amount, which was 3 times what it was at the beginning of the year. Guess what? It happened. It happened, by December. I actually exceeded it. So your investment portfolio provides inspiration. It provides discipline. It actually, because I say, okay, in the next 5 years, I want to own 1 million shares of this stock, of this stock, of this stock, of this stock. And it streamlines me because I wake up every day and then it's not yet 1 million. I wake up every day. It's not even 100,000. Okay, I want to own 1 million of MTN and I wake up and it's not even, 50,000 yet. It's not even 30,000 yet. So what happens when some money strays into my pocket? I do some service for people and they pay me. I have a choice to go and buy a car, or I can look at my portfolio and say, oh, this portfolio I'm constructing, I still don't have, it's not up to 1 million yet. So that money they paid me, I move it straight into a portfolio. Okay. I've done some work that I was paid close to 18 million. I didn't touch any of it. I drove it straight into a particular asset class. Now, if I didn't have a portfolio is like a framework. It's like a frame, a structure to accommodate your financial dreams. If I didn't have that, I could easily go and buy a car. My portfolio gives me the discipline for delayed gratification because I don't have 1 million shares of MTN yet. I don't have 1 million shares of GT Bank yet. The car has to wait. I have money to buy a car. I don't even have a car. Not that I can't buy a car. I don't have a car. I have a truck that I use for work. But a truck, say a heavy diesel truck, Ford F-250 diesel turbo engine. So that's not the kind of thing you used to drive around. So I still enter keke All right, the tricycle, for those of you who don't live in Nigeria, I still enter keke. The only one I try not to enter is this Okada people. I tried it one day. I entered Okada somewhere in Victoria Island. As soon as I sat at the back of the thing, the guy turned to talk to me, and then this local gin was oozing from his mouth. Oozing, local gin. This was about 10 a.m. in the morning. This guy already had drunk, this thing. I just pleaded with him, stop, 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 stop. And you know, told him to drop me. And then they don't use helmets. So I try not to use that one, but I still, so I can buy a car, but I'm not doing it yet because a portfolio is keeping me in check. All right. I'm not rich yet. Okay. Now, it also helps you to spread your risk. If one investment does not do well, the other ones might balance it. Like I did some bit of farming last year. My yam did not do very well because we had planted late. And not just that we had planted it late last year, the rains did not come on time. So the ground was extremely hot. The temperatures were high, so it affected the yield. Now, my coaching business also did not do very well because many clients that I used to work for, like MTN, like Flutterwave, those big companies, we didn't have projects because many of these companies were having issues, with the economy, the devaluation, the inflation, and things like that. So coaching and leadership training wasn't on their, top whatever. So you can imagine if that's the only thing I had in my portfolio, if my business is the only thing I have in my portfolio, I wouldn't be here talking to you. Okay. So I also did some commodities, last year, palm oil. So these things help. So your investment portfolio, you want to construct it in such a way that you de-risk your assets. If one doesn't do well, the other one does well. And then finally, your investment portfolio is a way to materialize the concept of making your money work for you. Awesome. Okay, so now let's talk about stocks versus equity. Let me explain it before. Let me just use some illustration before we go to stocks and equity to make it very easy. But I have a couple of comments in the chat here. So let's take a look at some of your comments. Yes, finance is a language of wealth. You can't avoid that language. So the reason I talked about learning Chinese, and I think that was also when I went off to talk about how the colonial history of Africa affected the way that they structured the different countries, and then immersed countries within neighborhoods where they didn't speak the same language. Because we don't speak the same language, our economies are small, there's a lot of tension and all that because we are surrounded by French-speaking people. We don't understand them, different culture. You go to Benin Republic or Togo here, their bread is very hard in Cote d'Ivoire. So each time I go to Abidjan, so they have all their French bread, hard. We don't have that kind of bread in Nigeria, so you see their bread is French, their kitchen, their culture, everything is French, totally different. So in the same way, when you do not acquire the language of wealth, the language of finance, the language of investment, wealth will elude you. So you need to acquire the language. Simple things, like savings, investing, interest, macroeconomy, microeconomy, borrowing, lending. You need to be familiar with all these things, mutual funds, stocks, bonds. That was the point I was trying to make, when I talked about those stories. So finance is the language of wealth. Okay, and then yes, Victoria and Godwin reminded us that your investment portfolio is your ticket to financial freedom. You shouldn't be talking about financial freedom and not have a portfolio. On Facebook, a couple of comments. Yeah, same thing. Money needs a portfolio to grow in. Fantastic. Yes. Damiete, Batubor, Omotola, Omolola, or money, your investment portfolio is your ticket to financial freedom. Absolutely. Absolutely. Joseph Okechi, your investment is your portfolio. Investment portfolio is your ticket to financial freedom. Fantastic. Okay. So now let me explain stocks and bonds in the easiest way possible. Stocks is when you own a share in a publicly traded company. So stock is about ownership. So when you think about stocks, you think ownership. When you hear stocks or you hear shares or you hear equity, you are talking about the same thing. So when you hear about equity, you're also talking about stocks. When you hear shares, you're also talking about stocks. So you look at a company as a property, as an asset that is divided into several pieces. It can be 10 million pieces, it can be 100 million pieces, it can be 4 billion pieces, and those pieces are called shares. And then different people come together and buy portions of that company. They become shareholders. Then they own, you say that they own shares or they own stocks in that particular company. So MTN has, I'm not sure how many shares, but we're not going to, we can find out all that information. So if you buy 10,000, then you have 10,000 shares in MTN. Bond is different. Bond is debt. So why stocks is equity, bond is debt. Why is it debt? A company wants to expand or they want to adopt a new technology or they just want to grow their marketing. Now, that company decides to borrow money. They decide to borrow money from people. So they issue this debt. So maybe they want 10 billion naira. So they issue bonds. So people can now give them money. So in bonds, you are lending money. The company is borrowing money. You are lending money to them. And then it's called bond because they will pay you back that money with interest. So that's basically the difference between stocks and bonds. Now, bonds are mostly issued by the government, but companies can also do that. But the governments, many governments in the world issue bonds, the United States government, the Nigerian government, and then we're going to see a few examples of that. So now let's look at the major differences between stocks and bonds. So as you can see, stocks are also equity or shares and bonds are debt, and then they are fixed income. So anytime you hear fixed income, debt is one of the fixed income or bonds. It's fixed because when you lend, say 1 million to the government at 15% interest, it means that they are going to pay you at the maturity. They will pay you, like in the case of Nigerian government savings bond, they pay you 4 times. They pay you every quarter. So if it is 2 years, they will pay you for 8 quarters. Then at the maturity, they will pay you that full money. So if you invest 1 million at 20%, it means that year one, they're going to pay you 200,000, but they're going to pay this 200,000 naira in every quarter. So meaning that every quarter they pay you 50,000. And then at the maturity of that investment, of that instrument, they will now pay you that your 1 million. Does that make sense? So that's how wealth is generated. So stocks represent ownership in a company. Bonds represent a loan that you made to government or a corporation. In terms of stock, you make money by capital appreciation. In other words, if you buy a stock for 23 naira, I bought UACN in mid-December for 23 naira, and then some I bought at 25 naira. And then today, UACN is 36 naira, 5 kobo or something like that. So within a month or so, I have had what you call capital appreciation. And then eventually, when they declare dividends, I will also earn dividend. But in the case of bonds, you have fixed interest payments. That's why it's called fixed income. All right, so you have a fixed interest. In other words, if you lend the government if you lend the government 1 million naira at 17 or say 20%, they are going to pay you fixed interest. They call it coupons. So let me just show you an example, and then I think we begin to touch on how to invest. So now, typically, you will need your stockbroker to be able to invest. And then your stockbroker will send you something like this. Your stockbroker will send you something like this. Okay, you're not seeing what I'm showing you. Okay, so this is how you invest in bonds. Okay, so this is my stockbroker. And then the federal government savings bond is actually every month, the first week of every month. So this is the structure. The February 2025 FGN savings bond has begun. Find a summary of the offer below. So you can see there are 2-year tenures and then there are 3-year tenures. So the bond is due February 12th, which is in the next 6 days. And the bond is being issued at 17.799%, which is basically 18% if it is 2 years. If you're taking the 2 years bond, and then if it's 3-year bond, it's going to be 18.799%. It has an opening date, and then it has a closing date for you. And then it talks about the settlement date. All right, the settlement date is February 12th. All right, now the issuer is the federal government of Nigeria. Units of sale means that you are going to buy 1,000 naira. Let me make this bold. I hope you can see that. You're going to buy 1,000 naira per unit. And then you are going to buy a minimum subscription of 5,000. And then thereafter, you are going to do 1,000. And then they allow you to do a maximum subscription of 50 million. Then the next information you see here is the coupon payment date. So they will pay. You can see that there are 4 payments in the year, because this one is going to run February 12th to February 12th. So there are 4 quarters. If you buy in March, it's going to run from March 2025 to March 2026. So the coupon payment date will be May 12th. So in other words, if you bought, say, 10 million, and then you bought the 2-year savings bond, they're going to pay you, let's say 18%. Let's say 18%, or let's say 20% to just make the calculation very easy. 20% of 10 million is 2 million naira. And then it's going to be paid over 4 quarters. So the 2 million divided by 4 will give you 500,000 naira. So it means if you invest 10 million, May 12th, they will pay you 500,000. August 12th, they'll pay you 500,000. November 12th, the government will pay you 500,000. February 12th, they will also pay you 500,000. The next May, because it's 2 years, the next May 12th, they pay you 500,000. The next year's August 12th, which is 2026, August 12th, they will pay you that. November 12th, 2026, they will pay you another 500,000. February. So that's why it's called fixed income. So every quarter you get $500,000 as 500,000 naira. Then at the end of it, which is the settlement date of February 12th, 2027, if you take the 2 years, they will pay you the 500,000 naira and then pay you your initial 10 million. Isn't that interesting? So that's how it works. So that's why they say redemption, bullet repayment on the maturity date. Once the 2 years mature, they pay you. Now, this is how to invest. Your stockbroker will give you this instruction. Please print carefully, complete the application bond. All right, so let me show you what the application bond looks like. Okay, I'm not sure you're seeing this, so let me do that. So this is what the application bond looks like. So this is FGN savings bond, February 20. Okay, so this is what it looks like. It's actually issued by the Debt Management Office of Nigeria. So federal government savings bond at the following rates, which they've already summarized. A summary of the offer. Okay, so this is actually what it looks like. But that's not the form I was looking for. So let's look at this, the subscription form. All right, so this is what it looks like. Month of offer, first of all, is asking you the tenure of the bond. Is it 2 years? Is it 3 years? You select, and then month of offer, minimum is 5,000, maximum is 50 million. All right, then ask the value that you apply for. So if you're applying for 10 million, you put it there. Okay, you fill in all your details. If it's individual, if it's a joint one, you're doing with your spouse, or with your child, your phone number, all that. Okay, so this is basically how to, because a lot of people have been asking, they want to buy the bonds, they want to invest in it. This is the application form. And when you finish applying, so whatever it is that you are paying, it gives you an account name where you pay, of course, not cash. And then there is, when you pay, you send evidence of payment to your stockbroker. And then you want to do that before February 7, because it's usually the first week in the month. You send that to them, and that's it. You've subscribed. You've subscribed. That's simply how to invest in the bonds. Okay, so you will always need your stockbroker. And if you haven't gotten opened your stockbroking account, you want to do that. Okay, so I will let you read. I've covered all the things that are here. I will let you read this, when you watch the replay. So you've already seen that stocks are high risk, but this one is more stable, it's lower risk. Income generation, we've talked about dividends paid, but it's not guaranteed. And then for bonds, it's regular, fixed regular interest payments. In terms of ownership, in stocks, you are owner of a portion of the company, but in terms of bonds, you are creditors, you are not owners. So when you invest in stocks, you are an owner. But if you invest in bonds, you are a creditor. Okay, so you are a creditor. You shall be the lender and not the borrower. Okay, duration for stocks, there's nothing like maturity date. You can hold it for 50 years like Warren Buffett. But for bonds, it's got a maturity rate date. And then what you want to do, if you want to continue to have constant quarterly cash flow, you just want to structure it in such a way that if you invest in the bonds every month, then you can set it up in such a way that you are paid literally every month. You're paid literally every month. And typically, the bonds are good for older people, people in retirement or nearing retirement who, do not really want to take so much risk with their money because the stocks have more risk than bonds. And bond, the risk is very, very little. But if stocks have the potential for very high returns, very high returns. So I was talking to a young man who made whose investment in Presco. He bought Presco when I was talking about Presco, has already reached like 60%. In 1 month, was it Presco? Yeah, I think it was Presco we were discussing. And then another person, her GTB portfolio is at 90-something%. So, but you can't do that with bonds. But at the same time, stocks can be risky because it can also fall. It can also fall. So I have some stocks that are doing negative right now. But of course, I'm not selling them because it's not just any time that the stocks go down, then you panic and sell them. If you have good stocks, like my Dangote cement is at minus 11%, right now. I bought at 400 and something, and it's gone down to, I think it's about 394, 390 something, today. So I'm incurring about 12%, but I'm not going to rush and touch it. Okay, so that's about stocks and bonds. So I hope that this has cleared all the confusion about stocks and bonds, for the investor, for the beginner investor. So you might want to divide your portfolio in such a way that part of it is stocks and then part of it are bonds, because the bonds guarantee regular fixed income. Stocks are more risky, but it can be far more rewarding than bonds. And then some people have recommended, I've listened to an expert, who recommended that when you want to build your portfolio between stocks and bonds, that you should subtract your current age from 120. So whatever you get is what you invest in stocks, and then the rest you put in bonds. So in other words, if you are 50, 120 minus 50 will be 70. So you put 70% in stocks and then 30% in bonds. So how do you invest in stocks? Choose a licensed stockbroker, open your stockbroking account, fund your account, and begin to invest. And then be patient, let your money work for you. Don't tremble and be triggered anytime it starts going down, the market starts fluctuating. The stock market is a long game, it's a long-term play. So you really want to make sure that you invest in very good companies. And then I'm going to close with specific recommendations that are really what I consider very good buys now. I think that Aradel is a very, very good buy for anyone who wants to enter the market right now. And let me see if I can show you a few things why I'm convinced that Aradel is a very good buy now. If you can get Presco, that is also very good. But what you can, Presco is very scarce right now. But what you can do is after they've paid their dividends, they will likely mark it down, and then you can go in there. So if you look at the summary for the Aradel report, their financial year 2024 report, earnings grow by triple digit as production increases. So the performance of this company is incredible. Aradel showed strong financial performance with triple-digit growth in earnings, wider profit margins, and robust liquidity. With higher oil prices, increased production levels, and subsidy removal, the oil company's revenue rose from plus 162 to 581 billion, with 64% generated from crude oil and all that. So it's amazing. There are a couple of other happenings in the company that shows that once the stock starts rallying, you might not find it. Today, the asks were like 3 times the bids. In other words, too many people want to sell at this time, and then it's trading at 563, thereabout. But of course, if you know what you're doing, you will buy at less than 553 because you don't always buy at the current stock price. You can limit, you don't always have to buy at the market price. If you know what you're doing, you can limit, and I'll show you guys during the financial fitness challenge, how to limit, how to determine the price to come in. Like I don't always buy at market price. If they quote 400 Naira for market price, sometimes I could get it for like 385 or something like that. There's a way you look at the bids and then you look at the ask. So I'm able to see what the highest bidder is bidding, what the highest seller is offering. And then sometimes I just add like 5 kobo and I'm able to buy. It's lower at the lower market, lower than market price. And, so everybody is happy, the buyer is happy, seller is happy. So you don't always click buy, and then you buy the market price. You need to know how to limit your price so that you can get it at bargain. And then sometimes, you buy like that, and then you have instant, you make money instant. Yeah, because it's 563, but I'm buying I bought at 555. So automatically your gain goes green. Anyway, we demonstrate all that during the financial fitness challenge. So which is the last comment, because the financial fitness challenge is coming up on the 18th to 21st. The last day for enrolling, it will not be extended. The last day for enrolling is 9th, which is this coming Sunday. Today is Thursday. It's not going to be extended. And so if you haven't registered, just send me a message, DM me on Facebook, on LinkedIn, wherever you join from, ask for the details, and then I'll send you the payment details, and then you can join the group instantly. Other than that, has this been a very good session for you? Now it's time to type your aha moments. Everyone, your aha moments. And then, of course, if you also have a question, you can type it in the comment section together with your aha moments. And then we will round off and get ready for tomorrow. Okay. Ogenekewe asked, do government tax returns from bonds? No, they don't. That's another advantage. They don't tax it. They don't tax it. That's another advantage. Innocent says, which one is best to invest in, company name or personal name? It all depends, it really depends. If your company wants to invest as a company, people do it. So some companies invest in other companies. So it all depends. Your company can invest, and of course, you are going to indicate it in your financial statements. And I think it will come as other income and other, because it's not coming directly from your operations. So yes, you can do either. It all depends on your preference. Okay, what are other aha moments? Facebook, bring it on. Okay, your aha moments, everyone. Sum Tochukwu says, my aha moment is learning about government bonds. Fantastic. Stephen says, finance is the language of wealth. Priska on Facebook says, aha moment is financial market is your money working for you. But labor market is you are working for money. Absolutely. Emmanuel asks, what's the cost for the financial fitness challenge and registration details? The cost is 120,000 Naira. And registration details, actually, let me put it here so you can, let me look for it and put it here so you can screen capture that. Okay, so you can screen capture that while we talk. And let me also do the same thing for you guys on Facebook. Oops. Okay. All right, Facebook is hanging. I'm not sure why that is. Anyway, okay, there we go. Mubarak, you're welcome. Mubarak says, very enlightening. Thank you. Okay, so this is how to enroll. You can screen capture that and then act on it. All right, so a few more aha moments. Emmanuel is saying, is Aradel not too high at the current price? I don't think it is. I think Aradel had even done 1,000 plus, like it's 52-year high. It's probably 1,100, 1,002. I don't think it is, based on their performance and on their outlook. Okay, Damiete says, aha moment, knowing the difference between stocks and bond. Very good. Ziwa says, very good information. Do you advise investing in newly listed company, primary market, IPO? It depends. It depends, if it's a very good company and then you've done your research very well, because the secret of good investing is in research. Ruben says, living abroad, is it possible to invest in Nigerian financial market? If yes, how can you help? Yeah, that's exactly. Ruben, I'm aware that you already enrolled in the Financial Fitness Challenge. Please look at you have a bonus there on how to earn and invest in the Nigerian stock market. All the information you need is there. I actually need you to quickly open your stockbroking account. There are videos on my YouTube channel that takes you step by step on how to open your stockbroking account. That is the very first stage, because if you don't have that, we can't even have that conversation. So you need to go beyond that question about whether it is possible. Yes, it is possible. I need you to actually open your stockbroking account so that during the challenge, we can talk specifically about things to invest in and how to construct your portfolio for growth. And I can also share with you my investment philosophy and what I'm investing in. And then we talk about the best time to buy, because many of the stocks are very high right now, because some of them are declaring their results and then getting ready for their corporate action. So usually this time is very high to buy most Nigerian stocks. But once they finish paying dividends, they will mark it down. And that's a very good point to enter. But there are still very good markets, very good stocks to buy now. Aradel is one because that is what I'm buying myself. Dangote Cement is one. They have very strong fundamentals and they are dividend paying companies. So Dangote Cement at 390 something is still very good to buy at this time. Yes, you can invest in the Nigerian financial market from abroad. So please, how can one get into number 13? Zuka, which one is number 13 again? Yeah, I wish you had actually just put it down there, but let's see quickly what number 13 is. Collectibles. Yeah, collectibles, rare art, wine, rare coins, some of my colleagues in Chevron, the Americans in Chevron, I know my boss particularly, and a couple of people, they made incredible collections of our what do you call them? See, not masquerades. Well, not masquerades. What do you call them? These are our masks or something, I remember they would travel to Benin, load up some of those carvings and all that because they are actually very, very valuable. Then I know people too who collect. In fact, you are in the US, it's even easier for you there because those things are actually valued a lot more there than here. And people in this part of the world, seem to be, a little bit more struggling to find food to eat, to appreciate art. Yeah, so you can do that. And then there are auctions. I know there are auctions in New York. There are probably auctions in different parts of the world where they sell this rare art, rare works and of art. But the key to that is to make sure that it is something that the market, that people appreciate. Because if you bring a collectible, like a watch, there is a watch, something Patek, that somebody had bought that sold for 31 million. Patek, something, $31 million. If you bring that kind of thing here to Nigeria, nobody will buy a watch, $31 million. And then there was a painting in 2004 by, is it Van Gogh or something they call him? Le Garçon or something, Le Garçon, is it Van Gogh or one of those? They bought for $104 million in 2004. Today, to 2025, if they are selling that same thing, I won't be surprised if that thing has climbed to $500 million or more. So just do a little bit of inquiry about collectibles and then where they do that. And then some people, like sometimes when I come to the US, and then you have these flea markets, sometimes, you can get some things, in the flea markets, people, and then you get some jewelry, some sort of thing over there that the people selling it in the flea, because it was pawned, don't even know what it is. And then you take it to, people who actually know these things, and then they value it for you. Or you take it to the curators in the museum, they can look at it and tell you, wow, this thing you're holding in your hand was a violin from 1878 or something like that. If you find one thing like that, you're made for life, because that one violin used by some popular musician in 1898 that somebody just pawned and sold off because it was just in the house doing nothing. You will be surprised, might be worth, $20 million, and then people will struggle to buy that. So that's one way you can do that, just research and then ask around.
Sir, thank you so much. But actually, the one that I was asking is number 10, especially the oil in number 10.
Oh,
That's gold, silver. Yeah, not number 13. I'm so sorry. That oil, that's the one that I'm really, that palm oil that
okay.
that professor was talking of.
Okay, I did
Ndubisi.
palm
Yeah.
oil. So the way I did it, and since you also enrolled in the Financial Fitness Challenge, please let's talk about it. It is fantastic,
Okay, please,
commodity
please.
trading.
Yes.
But like I'm saying, make notes of everything you want me
Yes.
to, because I might not cover everything, but anything that catches your fancy during the challenge, mention it, and then I'll tell you exactly what I did because I did palm oil. There are also lots of other things like sesame seeds. In my research, rice, egusi, there are periods in the year where these things are dead cheap. Because in the case of palm oil, the
Mm-hmm.
farmers are selling at very, very low prices because everybody, they want to sell so that they can get some capital to farm. So because of it, they do. But then toward the end of the year, um, November, some bit of this December, and some bit of January, the prices of these things double or even triple. And so people make a kill from just commodity alone. There are people that's all they do. That is all they do. I've seen people that is all they do for a living. They just trade commodities. When it's time for sesame seeds. So I know this woman, she learned it from her mother. Her mother, poor illiterate woman, initially used it to build real estate and to train all the two. She told me that there were 12, trained all of them because their father left them or something, maybe because she didn't have a male child or something. There were so many, maybe herself, siblings, and then step sisters or something, brothers. It was from commodity trading that the woman built us in the village. They couldn't believe it, and then trained them. So she herself picked it up, and she was the one that coached me. She was the one that mentored me because I tell you, my 85-year-old mentor said that no man can grow rich except another person shows them. And people are playing. When we tell people come for coaching, pay for knowledge, pay for these things, they think that they are being smart, that they can do it by themselves. But I had to literally pay this guy. So what I did was, because she was also trading and buying these things from the village market, interior village market, where they buy these things, is so difficult, transporting it and things like that. So I have a truck. So the day she was going to buy, I took her to the place. She bought her own, bought mine, and then I took her. I took her own, the truck carried everything, carried her own. I took her to her house and then she offloaded her own and all that. So she told me how, as at the time we were buying palm oil, she had bought sesame seed at 40,000 a bag. Within 2, 3 months, it was selling at 140,000 for one bag. So you see some of these village people, what I discovered is that there is money, sometimes more money in some villages than people, than in the city. I'm told that 70 something percent of people in Lagos earn 100,000 naira or less every month. But there are women, those women in the village, they don't have fancy cars. They don't live in big houses that people in Lagos. But these people, when you see their cash flow, it will humble you because it humbled me. So remember, let's talk about it let's talk about it during the Financial Fitness Challenge. Okay. Victoria said my aha moment. Stocks have higher risk, higher returns, whereas bonds, okay, lower risk, lower returns. Very good. I enjoyed your lecture. What are the best stocks to invest in? Yeah, it also depends on your goals. And especially if you're looking for long term, you want to think about solid stocks like First Bank of Nigeria. You want to think about MTN. You want to think about Dangote Cement, Aradel, I've been mentioning, Presco, maybe Okomu. In Atlas portfolio, they need utility. How can someone living in the US do that? Um, yes, I'm actually trying to open Atlas portfolio. I'm actually doing that as we talk so that I can understand and then be able to help. So what I want you to do in the financial fitness group, Zuka, send me a message concerning Atlas, and then I'll give you their phone number. There is a phone number of the Atlas person who is directly in charge of opening the stock market account, and then she will direct you. Okay, just remember, let me look for that number and then I'll type it in the group. Remember to ask me. All
Okay,
right.
thank you.
Kizito says, amazing session. Please, do you have a suggested platform to buy the FGN bonds? Yes, your stockbroker. And then Stephen has suggested that Afri Invest is good. I've also heard that Afri Invest is good. Okay. So yeah. Okay. Batali says, I need help on comic writing, movie script business. Okay. We're going to talk about once we exhaust a little bit of the financial markets, we will go into business, into running businesses, and then we can talk about the specifics about how to build your business model that is very profitable and all that. So when we are doing that, you can bring this issue of your movie script. Okay, so this is a good place to say goodbye. It's been wonderful sharing this knowledge with you. And as usual, what matters to me is that you implement it, okay? My joy is that you implement these things and grow. Grow for yourself, grow for the family, and please grow for this continent. We've suffered in this continent. Grow for yourself and then grow so that we all can join hands to create impact in this continent. And whatever happens, don't be afraid and don't be discouraged. Just keep showing up because you just never know. You just never know. Just one investment away from $1 billion, one encounter, one network away. So keep showing up on a daily basis. And I'll see you at exactly same time tomorrow night. Good night.